Hello everybody and welcome to another edition of Bleeding Crypto's Market Update. This is part of the YouTube series that I told you guys that I want to go ahead and start doing for Twitter and for my followers. And this is going to be a continuation of the one we had a few days ago. So today is Friday, February 24th, and let's take a look at Bitcoin. I'm gonna start off with the chart that we talked about like I said, a few days ago. So this is the scenario that we were looking at. This is a scenario actually that I posted this on Twitter. We were at the time we were on this candle here, and we have what I like to play, which is a double bottom, a W, if you will, formation, a market structure. So the end of that market structure would have put us in this area here at 25,250, basically to complete the W. A lot of the times it'll break right through it, because since this here was a target was derivatives driven, and when we get liquidations and they have to buy Bitcoin from the contracts that were liquidated, it sometimes pushes the price up just a little bit higher. So based on the heat that we had on HyBlock, I was looking at this area too as a scenario too. And right here I had typed in there invalidation is if we close below here, which we obviously did. We closed below here on the 4-hour time frame. So this double bottom is now pretty much invalidated. So what I'm going to do is I'm going to erase these here. I don't want to update this until I did it live with you guys here, so we can kind of follow along. So let's go here. Let's take this off here. And what we do have, we still have some of those, let me go here. We still have those targets down below that we talked about a few days ago. So if you want to refresh your memory on that, go ahead and take a look at that video. Remember, you can always play these videos at 1.5 or 1.75 speed to make them go really fast. Obviously, it's going to create a very high-pitched sound on my voice, but at least you can get through the videos much quicker. We're not going to make this lengthy like the last one I did. This is going to be just a local look of what's going on. So for right now, I'm going to go back to the 12-hour time frame since we're looking at local moves. Let's do this here. We are going to look at the previous resistance. So whenever we climb higher, what I like to do is I like to chalk out areas of prior resistance, which is what I'm going to be looking for in the future when we do eventually come down. So one of the areas that stick out to me is right in here. So let's go here. And let's go here, lift this up just a little bit. So what I'm looking at is just like this touch here, this touch on support, resistance, in this area here, bring it over here. We've got some support there, nice support in there. So that usually, like I said, this area here, resistance, acts as new support. And as you can see, we fell through that here. We failed that right in this area here. So there's a couple of things that I want to look at now moving forward. I want to look at what is the next area of major support that we would see major resistance support for Bitcoin. So I'm going to go ahead and use basic support and resistance. So here I'm going to actually make this green for support, and you can see here this was strong support, strong resistance here, resistance in this area, and support here. And you can say we bounced off of that. We got really close within a few bucks. This to me is valid enough for that support that I'd be looking for if we continue down further. Now we got to take it one step further down. Let's see what is the next area again of support and resistance. I'm looking at this area here. As you can see right in here, this was a tough area to crack till we finally broke it, back tested here, and off she went. When we came down in here, look at how well we bounced off of here, and then we bounced off again. We bounced off again, and off she goes into that new local highs. So I'm going to go ahead and leave that in there. And then obviously we have this area here that we were talking about earlier in the week. Okay, now that we've defined that, the first thing I want to do is look at the area where we broke down from, because a lot of the times what will end up happening is that we end up going back here, which is this line here where we broke off, and back testing this before going down. Now, this area becomes a really important area to look at, because what could happen is initially we're more than likely going to reject off of it. However, if we do find acceptance back up on here at the bottom of this range here, then there's a possibility that we can consolidate and do continue to those higher targets that we originally were talking about. As I'm sure that heat should still be there. Let's take a look at it. I haven't refreshed the liquidation heat today, so let's take a look at this here. Yeah, it's still there. Look at how strong this area here. This 24,950. We've got 25,550. We've got 27,000, and then we've got 29,700. So we still have that heat up above for targets to hit those areas for market makers to make money. So those are always going to be something that we want to keep in the forefront of our mind as we plot out on areas to the upside, and also we're going to look at areas to the downside. So locally right now, I'm looking for a back test here. If we fail it, I'm still going to keep an eye open, because there's a lot of scenarios that can play out. We could back test, come back down, put a bullish double bottom structure, get us that continuation to break above this resistance area, and again consolidate some bullish structure, and off she goes. That is still in the cards, in my opinion. However, as we break these, if we can back test and come down, and this doesn't hold, and we break further, then we've got some targets here to the downside that we still need to look at. Keep in mind, guys, that whether we're bearish or we're bullish, it's very unlikely that we're going to see these massive God candles coming in. We're not going to see $5,000 candles coming in. So you've got to play it pretty much on each level of resistance and each level of support, and then wait for direction from the market. And the way you do that is go down to lower time frames. You start looking for bullish structures or bearish structures, like double top patterns for the bearish structures, double bottom market structures for the bullish structures, and so forth and so on. So that's going to give you at least some sort of insight of where the market may go. Doesn't always work out. This is a perfect example. I saw this as a double bottom, which it was. It had a nice W structure, but it failed to break higher, and it broke down. Same way in reverse, we can at some point, whether it be here or it be here, we can still put in those double bottom market structures, or maybe even a higher high, higher low for a market structure that'll get us to that reversal and start climbing back up higher. There are many type of things that we can look at for both bearish and bullish scenarios. So for right now, we just want to take it one step at a time. So for this move here that got us into this $25,000 area, what I want to do now is basically put in some fib levels. So here is, oh, look at that. Actually really perfect. So this is what I consider a reload zone. This is an area here where we typically will come back down. And on this particular time, and look, it actually worked out perfectly. Doesn't mean it has to bounce right at the top of this, at this box. In this case, it did, but this can go still further down. Typically, any place inside of here between 618, 706 and 786, any area that it lands inside of here, for me, it is considered an area where is a potential place to reload for the next move to the upside. But normally I don't reload right away. Again, what I like to see is direction. I want to see the market put some sort of bullish structure inside of here. Typically when I do that, I'm going to go to the 1 hour time frame, and I'll look for those double structure, those bullish structures here, whether it be a double bottom, whether it be a bull flag, whether it be a higher high, higher low formation, breaking us up, breaking us out of here, whatever it may be, whatever your go-to market structure or indicator that you like to look at for a reversal, I'm going to keep an eye. This to me is my go-to. So as of right now, she did a really nice bounce inside of there. So I'm going to wait for that to see if we can get some sort of direction. If we can't, and we break through it and we invalidate it, which is again very possible, then we map out our next area to the downside. When we're looking at retracements like this, guys, I'm not going to look too far down or too far up. There really is no point. And what I mean by that is, I put my area where I like to reload, And should I keep on looking? Okay, what if we break here? What if we land here? What if we land here? What if we go here? There's no point in this here. You got to take it, in my opinion, you have to take it one step at a time. This is a very valid area where we could easily come down, golden pocket, find some bullish structure, come back up, and up we go. Until it invalidates, this is still valid. So there's really no point in wasting time and looking for deeper scenarios. And like I told you in the last video, I'm not going to start looking at the weekly time frame to look for direction. We already mapped out the macro look on the last show. These updates are going to be up on local moves only. So for right now, to the downside, we've hit and we can still actually go a little bit lower, looking for that bullish market structure. Now, to the upside, say this is it here. Nothing really changes. We need to see that bullish structure either form here or inside of here. Now, one of the things I do want to look at next is going to be my EMAs. So I'm going to turn those on because the EMAs give me also another layer of confluence to see how bearish the market actually is. And my first thing I'm going to look at is my 9 EMA. So we crossed bear on the 30 EMA, which is never good. And we talked about that on the last show. We also crossed bear on the 50, which is not good. We are crossing bear very soon on the 100 EMA with the 9. And we've got the 30 coming collapsing above the 50 EMA as well. So as you can see here, we're not in really good shape as of right now, according to the EMAs. The way this looks, this is something that gives me a more of a bearish bias for the moment than a bullish bias. As you have all of these EMAs converging, sloping down, angling down, pointing down, it doesn't create any type of a bullish sentiment. So at the moment here, as this is pointing down, putting a lot of sell pressure onto this market structure, what I need to look at now is, can this 200 EMA hold? We bounced really nicely off this 200 EMA, and it doesn't surprise me. 200 EMAs and 300 EMAs are very strong areas of support and resistance. So if you look to the left, you can see here, when we came down, look at this. Look at this candle. Perfectly caught on that 200 EMA. And we ranged inside right here, up and down on this 200 EMA until we had our next move to the upside. And if you look further down here on this area, look how the 200 EMA acted as resistance before we finally broke above it, confirmed it, ranged above it, and then we took off. Same thing with the 300 EMA. We broke above it, we came back, we back tested, we took off, we back tested it once again, and then off she went. So when you look at a retracement now and you look at the EMAs that are now below the price action, you could usually expect the same type of treatment on the support end of it like we did in the resistance end of it. We caught it here. Maybe we'll confirm it again. If we can put, like I mentioned, some sort of consolidation, some sort of W, some sort of double bottom in here and move up, great. If not, I'm going to be looking inside this box. Depending on how long we stay here, this could allow the 300 EMA to actually get closer inside of this box, creating a little layer of support inside of this box, as the 300 EMA is a pretty good area like the 200 EMA for support. So that's what I'm looking for to the downside at the moment. Look at how well do we hold the 200? What do we do inside this box? And can the 300 be the last line in the sand? If and when we break the 300 EMA, then this gets invalidated. It's done. We go back to the drawing board. We erase this and we look to see where we are in a higher time frame, maybe the 12-hour or the daily. We'll start looking at some indicators on and some market structures on those time frames, and we'll take it one step at a time. To the upside, let's see, does anything change for me to the upside? Let me go. I'm going to go up to the higher time frames for a moment. I want to look to see. Okay, this is what I'm looking at right here. The 300 EMA. I told you guys it's a very strong area of support and resistance. Resistance finally broke above it, found acceptance. We found support on the 300. We lost it today. Now we have the 9 EMA getting very close. You can see on my labels here, it's technically above the 300 EMA, not by much. And if the bulls don't come through, we could very well continue on downward. And the next area of support that I'll be looking at would be probably the 50. And again, that 200 EMA. Look at that. Look at that resistance. Look at that support. Look at that support. Same way down. Whatever we looked at, whatever you mapped out on the bull side when we were going up, any resistance points that you found are typically going to be what you're going to be, are your go-tos on the way down for your support. Let me throw something on real quick here. I just want to look at the VRVP real quick here, see if there's any shelves, any gaps, anything that may give us some sort of indicator. Okay, so I like this little shelf here. So you can see here where this area of interest here, this candle here, volume bar on the VRVP lines up very well with this 618 right inside of here. But you see this gap here? This gap is not a very good look, because what this means that there wasn't a lot of support or resistance built up on the way up. That's why you have this gap here. And if you look to the left, typically when you see a gap like that, it's met by pretty much just either big green candles or big red candles. Let's look to the left. You see here, there was really not that much structure here. You see this, just one candle here. You see this, one candle here. There was none of this here. There's no support, no shelf being produced on the VRVP as that we could use as a support area when we're looking back down. Look at this gap here. You see this gap, massive gap? Look to the left. You see this? This is a parabolic move. These parabolic moves, it's all great and dandy. Everybody loves them, but they don't take into consideration of what happens when you are now on the other side of that move. And when you're coming down, these parabolic moves are never good on the way down, because as fast as they go up, they go down just as fast, because there was nothing here established for support and resistance for proper market structure. So I got a little bit ahead of myself as far as what I wanted to cover to the downside. As I said, I don't really want to look at big macro views, but I just want to look at the daily just to give me a little bit of a better insight. I was looking at the daily the other day as a potential flag pattern. And when I look at a flag pattern, I look at a couple of things. Well, three things. One, market structure, which we have. Two, if you back test this, you'll notice that when there's a bull flag, prior to the bull flag, we usually get a wick down to the 30 EMA. And this is across usually you see this more across the smaller time frames, but it can also happen on the high time frames. And three is the relationship between the MACD and the cross signal. Typically what I like to see for a perfect scenario is the market structure, tack to the 30, number two, and that the MACD doesn't bear cross the cross signal. It could still break out, and I've seen it break out after it's crossed, bearish on the cross signal, but I would say 80-90% of the time, it's right before it hits it or right when it kisses it, then we see that move to the upside. So I'm going to hit the MACD here, kind of look here. Yeah, see, this is not ideal. This is not ideal for the three rules that I look at for a bullish flag pattern. So I got 2 out of the 3. I really need to see my 3. So this still gives me that more leaning towards that bearish bias. Had this MACD not crossed the cross indicator and we were still above it, I would be leaning a little bit more bullish. But unfortunately, I only got 2 out of the 3, so I got to stick to the rules. And we're not looking very good at the moment. But again, I don't want to get too ahead of myself, because there's still a possibility that the market makers don't want to pay this out. They don't want to lose on this here. So just because we are having a couple of bearish days doesn't mean that it's going to go straight down. Markets don't normally take that route unless it's news driven, unless it's some sort of catalyst that gives us those $2,000-$3,000 red candles. Typically plays out in a more controlled move, whether it's to the upside or to the downside. There's a little bit more structure to it. And being that this whole entire move has been derivatives driven and not spot driven, this to me holds a lot more weight than just hoping that we go up or hoping that we go down. I'm going to be looking at this, even though we didn't break up on this last move. You cannot discount the money that the market makers have to pay. So you got to understand what you're looking at here in HyBlock. You see these heat indicators here? This here indicates that the market makers will benefit if they come here and knock out these large orders. So these large orders, you can look at them on the retail side, they're paydays. The guys are betting big that it's going down. Market makers look at this and say, if we can manage to break this, to move this up, we're going to get paid. So that's the best, I guess that's probably the best way of when you look at these charts, when I post them, to keep in mind. Retail is going to be up here on these green areas as they're shorting, and these are where they will get liquidated on those shorts. Same way on the bottom here, guys. When they're longing and we are going and we drop, obviously that is where they will get paid in the reverse side, the flip coin, the flip side of that better said. So as you can see here, if you follow this price action, I can't do it without these boxes popping up, but if you just follow the price action, look at how well the price action stays within these high concentration liquidation areas. Look at the way that goes after it. Look at, once it knocks us out, look at here, we go right back up into this area here, then we come right back down into this area here. So we kind of ping pong in between those high liquidation areas. It's not just one straight move up, one straight move down, because every day and every hour and every day that passes by, these metrics change. Some people get ultra bearish, some people get ultra bullish. They start betting one side of the market, and when enough people bet on one side versus the other, it shows on these heat maps. I think that's pretty much it, guys. Let me see if I can see some, let's see here. Anything really here? We've got RSI at 50 points on the daily, bear cross, volume oscillator not giving us a red print on the volume, on the 12-hour time frame. Not looking all that great. Ugly. MACD looks ugly on that. RSI lost is down at 43, below 50 points, so it's getting weaker. We've got a potential bear cross between the 9 and the 30 EMA here on the 12-hour. Remember what I told you guys about that? We talked about that on the last show as well. So that's not a good sign. So right now, for now, I'm going to stick to my 4-hour time frame. Let me just reset this here. Let me turn off my volume profile. I don't need that for right now. Let's see, technically we're below the 200 MA on the 4-hour time frame, and we are not really looking too good on the volume. So there's really nothing at the moment that I could build a bull case just yet. The only thing that I have, absolute only thing, is the fact that we bounced right on 618 and we bounced off the 200 EMA. Those are the only, actually I would say two then, the only two things that the bulls have going for it, which is very minor compared to the 10 things that the bears have going for them right now. But it doesn't mean that we're just going to go straight down. So just keep that in mind. It is Friday, so that's another win for the bears and another loss for the bulls, as weekends are not very good with volume. They tend to be a very slow, almost no action on Saturdays and Sundays. So we'll have to wait and see what Sunday, 5 o'clock Pacific Standard Time, what Asia does, which will be Monday morning for them, and see if they will move the market at that point. But typically Saturday, Sunday, all day, not much going on. So we'll just have to wait, be patient, see how that plays out, and take it from there. I will have my next update, guys. Today's Friday, so we'll do it either Monday or Tuesday. We'll take a look. I'm going to leave this chart here. I do have to update my computer, unfortunately. So on that update, I may lose this, but if I lose it, no big deal. I mean, it's just pretty cut and dry what I did here, so I can easily mimic it again on Monday or Tuesday if I lose this chart. But if you want to just take a snapshot and take a look at it for your own, for your own charts, and maybe plot this out as well, so you have some ideas and you kind of follow along on these updates, so you kind of also at the same time hopefully learn and kind of understand what I look for and how I look at the market and what makes me bullish, what makes me bearish, where I can try to find a bullish bias or a bearish bias, whichever it is. I'm not bearish or biased, bearish or bullish when it comes to short term. I'm going to play it as the market presents itself to me. Macro view, you guys already know that. I am still leaning macro bearish until proven otherwise, until my 886 gets invalidated, which is still failed to invalidate because we couldn't break 25.2. So it's still in play. And I already guys told you what would need to happen to break that 886. We covered that in detail on the last show, so there's no need to go over it again. But for the local move right now, I am bearish. And I'm not what I meant to say is that I'm not trying to influence you to be bearish or biased. I want to influence you on what you see on the chart and let that dictate whether we should be bearish or we should be bullish. I hope that makes a little bit better sense. That's kind of what I was trying to say, that I'm not leaning, I don't want you to lean one way or another based on what I feel. I'm looking at this and this is telling me what it looks like. And right now it looks bearish. Could it turn around? Absolutely. That's part of a trader's life. We have to look at it on each data point. Every day that passes by, the data changes, and it can change in our favor if we're looking to the upside, or it can point to the downside and be against us if we're looking to the upside, or if we're looking to the downside, it may confirm that move to the downside as well. And the point in case is that you have to allow the market to tell you and dictate to you what the market is doing, not your bias and not the alts. A lot of people will send me a message saying, "Oh, I don't know, man. This is looking. Tesla's is looking just like, or not Tesla, or whatever shitcoin is looking like it can run when Bitcoin is like shitting the bed." And let me tell you something, guys. Very rarely will an altcoin or shitcoin perform good when the market like Bitcoin or Ethereum is dropping the way it is now. If it is, it's usually some sort of news-driven event, and that's very rare. Less than 1% will do that. The majority, on the most part, will be going down. However, one of the things to keep in mind is look at those that are standing out. Look at the altcoins that are shining. Look at the coins that are putting 200-300% returns. Those are usually the ones that recover quicker. So that's something to look at. I'm not really playing too many alts, very few alts that I'm playing. I'm more concentrated on Bitcoin. My heavy orders are always on Bitcoin. My smaller orders will be on a handful of alts. I'm just not... There's just really, it's not a bull season. When it's a bull season, that's when it's time for alts. Not that there is an opportunity to make money on alts right now. There definitely is, but it's one of those hit or misses. They're not all putting in 200-300%. Some of them are, some of them aren't. A lot of them are just going sideways. You look at the weekly on most of them, they're still on the floor. So there's really nothing to make me start accumulating alts, to be honest with you. Only 3 alts that I am bullish about, that I want to make sure that I have in my portfolio at all times. And the only reason for those are because of the payment rail that Elon Musk and CZ have talked about for Twitter. And they've specifically said BNB, Mask, and Doge. So those 3 there are the ones that I definitely want to make sure that I have at all times, because bearish or not, if and when they announce what they're going to do with those 3 coins, and those 3 coins are going to moon regardless of what Bitcoin is doing. So I just want to make sure that I'm part of that and I'm not chasing that. I'm not chasing the hype. I want to be in those coins already. I've never heard of Mask until I saw that tweet from CZ. Obviously, I've heard of Doge and BNB. I'm a big fan of BNB, but Mask, never heard of it. Bought it only for that reason and that reason only. Everyone, have a really good weekend. I hope that this was helpful. I will, again, probably give you another update, a follow-up on Monday or Tuesday, depending on how crazy we get on the next 2 or 3 days with the price action. Have a good day.